Bitcoin today, institutional surge, price consolidation, and the road to $120,000. Bitcoin, BTC, continues to dominate the digital asset landscape as it consolidates near $108,000 on July 6, 2025. Despite mild intraday volatility and a 0.15% decline over the past 24 hours, the asset remains within striking distance of its all-time high and shows strong signals of institutional support and growing macroeconomic relevance. Bitcoin's current price action and market dynamics. As of today, Bitcoin is trading within a tight range between $107,245 and $109,111. This low volatility, following a period of strong upward momentum in June, indicates a possible accumulation phase. The June monthly candle marked a historic high close at $106,922, the strongest in Bitcoin's 15-year history. With total crypto market capitalization hovering around $3.32 trillion, Bitcoin maintains a dominant position, accounting for approximately 47% of total market value. Interestingly, while some short-term traders are positioning for a pullback, institutional inflows into Bitcoin continue to rise. A well-known crypto whale recently increased their short position to 210 BTC, now holding nearly 750 BTC in total. Despite that, analysts believe this may be a short-term hedge rather than a long-term bearish signal, especially as on-chain metrics show a substantial number of coins moving off exchanges, a classic bullish signal. Institutional inflows and the rise of Bitcoin ETFs. One of the most important market narratives today is the massive institutional interest in Bitcoin ETFs. Over $1 billion in fresh capital has flowed into U.S.-listed spot Bitcoin ETFs in just the past week, according to data from Bloomberg and BlackRock. These inflows are not speculative bets but rather reflect growing acceptance of Bitcoin as a long-term store of value by pension funds, sovereign wealth funds, and multi-strategy hedge funds. The current environment is unprecedented. Central banks are tightening, inflation remains persistent, yet Bitcoin is flourishing. Part of this resilience is due to Bitcoin's detachment from traditional asset classes. It's increasingly seen not just as a hedge against fiat devaluation, but as a digital alternative to gold. Moreover, whispers from Capitol Hill suggest that the U.S. Treasury may formalize a strategic Bitcoin reserve as part of its long-term sovereign wealth strategy, a concept already under discussion in countries like the Czech Republic and El Salvador. The technical outlook. A move toward $115,000 to $120,000? Technical analysts are watching a potential breakout zone between $111,000 and $115,000. If Bitcoin clears this resistance with volume, many are projecting a move toward $120,000 in July. Historical chart patterns point to strong continuation after a monthly ATH close, particularly when supported by macro and ETF flows. The Bollinger Bands on the daily chart are tightening, a strong indicator of an upcoming breakout. The RSI, Relative Strength Index, remains neutral, hovering around 58, and MACD, Moving Average Convergence Divergence, shows a slight bullish crossover. These signals point to price consolidation before a probable upside move. Notably, derivatives markets remain healthy, with open interest in CME Bitcoin futures increasing by 8% over the past 3 days. However, funding rates remain neutral to slightly negative, indicating that there is no excessive leverage, a healthy sign for bulls. Macroeconomic catalysts, rate cuts and capital reallocation. Bitcoin's momentum is also being fueled by macroeconomic tailwinds. The Federal Reserve is widely expected to announce a 25 basis point interest rate cut at its July meeting. In the past, Bitcoin has reacted positively to dovish monetary policy, as lower rates reduce opportunity cost for holding non-yielding assets like BTC. Additionally, geopolitical tensions are cooling, a positive sign for global risk assets. With the easing of sanctions and the stabilization of oil prices, capital is beginning to rotate from defensive plays, e.g., bonds, utilities, into technology and digital assets. Bitcoin stands to benefit enormously from this capital shift, especially as tech-heavy ETFs begin incorporating BTC allocations. Bitcoin in Europe. From speculation to adoption. Across Europe, Bitcoin is evolving beyond speculation. Countries like Germany, Switzerland, and the Netherlands are seeing increased Bitcoin adoption in the form of merchant payments, payroll integration, and even government-backed initiatives. A recent report by the European Blockchain Observatory shows that 75% of crypto transactions in Europe now involve stablecoins, primarily used for converting to and from BTC. This trend reflects growing comfort with digital assets in everyday life. While regulation remains fragmented across the EU, the markets in crypto assets, MiCA framework, expected to take full effect in 2026, could provide the clarity and legal backing needed for institutional Bitcoin adoption to accelerate. Long-term outlook and strategic positioning. For long-term investors, the fundamentals remain solid. Bitcoin's fixed supply, growing adoption curve, and increasing network security, hash rate is at an all-time high, form the basis of a strong bull case. Analysts at Fidelity, ARK Invest, and Bernstein have all reiterated their year-end targets of $130,000 to $150,000 for Bitcoin, assuming no major macro shocks. These predictions are based on a blend of technical projections, ETF flow analysis, and modeling of the Bitcoin halving impact, which occurred in April 2024 and historically leads to a 12 to 18-month price rally. Final thoughts. While short-term volatility is inevitable, Bitcoin today is fundamentally stronger, institutionally accepted, and globally more relevant than ever before. The next leg up, to $115,000 or beyond, may just be a matter of time. For investors, the key is not timing the exact top or bottom, but understanding the asymmetric upside that Bitcoin offers in a world where digital value is increasingly dominant.